Good morning. It's Friday. Happy Friday, everybody. Um, let's talk about oil. We're going to start with our daily chart, and every bar is 1 day of time. Um, and as you can see, the market has been making higher highs. So every day, this is a day going back to 618, the market has been closing higher and higher. So the overall momentum of the market is moving up. All right, one of the big things that we do is we look at ranges, dynamic ranges, and that's why we call this dynamic range trading. So I'm always trying to figure out. First question is, what is the momentum? Momentum is up. Second question is, where is support? And unlike many other types of styles out there, I look at the range itself as support. A lot of people will look at moving averages, or they'll look at a trend line. I like to use the ranges as support. So you can see here, for example, this range was acting as a support range, this whole entire range. Then the next day, the market came into that range at some point and made a new high, closed a new high. And this is what we look at on a daily scale. We try to find what range we're in. So for example, this 626, see, we're inside of this candle's range. So we're gonna just do that and do this, pull it over. So you can see that when we get microscopic, you're gonna see that this candle, we haven't closed above it. Okay, so we haven't opened and closed above that candle yet. We're still inside this 626. We're still inside of that range. It's acting as a support. Okay, it's acting as a support. So this range is defined as 59.95, and the low of that range is 58.58. So it's about a $1.28 range. And what we're trying to do is really just get into this range somewhere. The art of trading is to get into this range, and then hopefully capture a move which would end up as a new high to get one of these, another candle. All right, so the market's making new highs, and what we're trying to do is get into this range at a good price and capture a new high, close outside of the range. It's very simple, and you're just repeating that over and over again. So in order to do that, we go down to the lower time frames. So this day, we're going to mark that with these lines. Okay, I'm going to mark that first day like this. So you can see after that day, we're trying to get into a good entry point with the idea that the market is going to eventually close higher than this range. So let's look at that range on a 4-hour time scale. All right. You don't see much detail here. You don't see where you could potentially get into the range. So let's go down to the 1-hour time frame. Okay, and this is where we use all of our other tools and mechanics to enter into the trade. Okay, So this is the range we identified. This is the end of the day that created this range. And the market has just been vacillating or oscillating inside of that range since then. On the 1 hour time scale, you can see more bars, and you can see a 50 period moving average that it's kind of bouncing off of. You can also see a support level forming here on your average true range. So potential entry points are when the market pulls back into support. All right, it's pulling back into the range, which is support. How far? Well, here we can see 50%, meaning this is 100% of the range. So when you get to around 50% pullback, that's a good entry point. Let's go to 15 minute. Let's go to half hour. Okay, here we go. You can really start to see how, these oscillations happen on a different time scales. But and the farther you go in, 5 minute, 1 minute, you'll see more and more of these. The vibrations are faster. So on the 30-minute chart, you can see how here you're starting to get oversold. You've already surpassed the 50% pullback level, or 50% Fibonacci level into the range. You're in this AVZ zone. It's called an AVZ zone because you're between the 50 period moving average and the 200 period moving average. Right there. That's really where your entry is, right there. Okay. So if you got into there, you'd be up about $300 right now, 30 ticks. And you can go down further and further, to the subatomic level, 15 minute, with the same idea. You're just looking for a great entry point, and you're looking to get in on one of these pullbacks. When you get to these levels, you figure out where you are in the range. So when the market gets oversold like that, you have to say, well, where in the range am I? So let's look at that on a 15 minute. So you would say, you could look at any one of these pullbacks if you want to enter on a 15 minute level. So here, this is below the 50 period moving average. This is below the 50% pullback. So probably this is a 61% pullback into the range. So that's an even better range if you want to stick around and wait for that. It's an even better entry point. So you can see here the market bounced off of that 68.5% pullback, and now it's moving up. We have 2 positions on right now. Hopefully this thing is going to close above this range, somewhere up in here. And at that point, we would look to exit and just rinse, wash, and repeat the whole process again. So hopefully this makes sense, and we'll keep posting these and go from there. Take care.